Good morning. Asian markets plunged in early trading today following a brutal day on Wall Street where stocks took their deepest tumble in more than a year. Overnight in New York, the Dow Jones Industrial Average plunged 3.6% to 10,068 in its biggest point drop since February 2009. Risk appetite has taken a severe beating owing to concerns that the European debt disaster could derail the worldwide recovery. As a result, the bulls have their backs against the wall and may remain on the defensive if the European crisis does not subside. We expect another gap down opening. Should the global picture change for the better, we may see the key indices do a bungee jump, but then at the end of it, you may still be left hanging. Fear is running very high amid significant external uncertainties. The bravehearts amongst you could look at snapping up good bargains at lower levels, but we would advise against any kind of adventure right now. The NSE Nifty failed to rebound after slipping below 200-day DMA and could be headed for further downside. What's worse, the S&P 500 index in the US has cracked below 200-day DMA thanks to disappointing economic data and nagging worries over the Eurozone debt crisis. Meanwhile, the US Senate has approved the most significant increase in the regulations of US banks since the Great Depression. The bill now goes to the House to iron out differences. European shares were also battered, though the euro recovered following the release of a few weak economic reports in the US. The results to be declared today are Edelweiss, Force Motors, Gammon Infra, Inox, ITC, Jyoti Structures, Reddington India, Sadbhav Engineering, Take Solutions, Varun Shipping and Zilog Systems. Despite a 21% year-on-year rise in per gram gold prices on Akshaya Tritiya, the quantity of gold sold this year is expected to be higher than that of last year's, indicative sources from industry body World Gold Council told today. Across the country, 25 tons gold was sold last year on the festive occasion. The annual food inflation based on the wholesale price index rose 16.49% for the week ended 8th May as compared with the previous week's annual rise of 16.44%. 2G license renewal may cost telecom firms 1 trillion rupees. Expansion of cement production capacities in the southern states is likely to be slower than expected due to shortage in coal supplies. The government's fertilizer subsidy bill for the year is expected to expand by an additional 26 billion rupees following an increase in the administrative prices of natural gas. On account of a sharp increase in the prices of natural gas, the cost of power generated by gas-based plants is set to go up by 1.20 rupees a unit. Reliance Infrastructure has won its 10th road project worth 9.25 billion rupees from the National Highways Authority of India. Reliance Media Work along with Reliance Capital and Reliance Capital Partners has acquired 1,89,425 shares of Fame Cinemas at an average price of Rs 78.33 a share by taking its stake up by 0.54%. SBI has decided to scale down its branch expansion plan and is now expected to open around 500 branches during the current fiscal year as against nearly 1,000 proposed earlier. Two Malaysian-based contractors have floated India's first bond issue secured against annuity payments from National Highways Authority of India. Moving on to the recommendations, the technical calls are a sell on DLF. Traders are recommended to sell the stock at levels of Rs 270 to Rs 265 for a target price of Rs 245 to Rs 240 and a stop loss is to be placed at Rs 283. And a sell on Maruti. Traders are recommended to sell the stock at levels of Rs 1208 to 1190 for a target price of Rs 1140 to 1130 and a stop loss is to be placed at Rs 1228. Thank you and have a great day ahead.